Hey guys, I've got a whole bunch of headlines to go through with you guys. I look at a lot of information. I fine tune it down to the articles that I think you need to see or the ones that I have something to say about. So that's what these are. As well, we had a special cybersecurity report in the newsletter, and I want to talk to you. I called out and highlighted some of the parts of that, even if you're not a newsletter subscriber, in which case you would have already seen this report. If you're not a subscriber, there's certain parts I wanted to point out in that article. So it's an article, it's one of our own, an in-house article to go with all of this stuff. And my family reunion in Ohio went so good. I met some of my cousins I haven't seen in 40 years. And here you get to see my girlfriend, Jane. I know you guys have always wanted to see her, so here she is. And that photo bomber is my sister. And as my sister, she's a nice enough lady, but she's annoying to me. But that's just me because I'm her brother. For many of you, this is your very first time here. My name is Peter Leeds, and I am the small stock specialist. You might ask yourself, why small stocks? Because they produce the biggest gains, if you know how to find them. And please understand that nothing in this video or anything we put out ever is intended as personalized trading advice for you. Okay, the first one here. Most of these are from CNBC. Inflation peaking, 10 common consumer items where prices are falling. Some items have fallen on a monthly and weekly basis, potentially signaling that inflation has passed its peak and may be cooling off. For now, it has. And I've been telling you guys that inflation was coming down, and I told you that when everybody was saying it was going higher. A lot of people might say you're a contrarian investor, but that involves going against whatever the masses are thinking. That's not what I do. It's a different approach to things. I just see how the economy is going, and I'm telling you, and I'll explain to you what's going to happen because of that. But the point is, inflation, a lot of prices on the month-over-month basis have come down pretty significantly, such as boneless, skinless chicken breast, down 23.6% in a month. Car rentals down 9.5%, 12 large white eggs down 9.3%. Airfare, how much do you think that's come down? 7.8% in the month. Even hotel prices have come down. So there are signs, as I told you ahead of time, when inflation was going up, it was going to reverse and come down. It's going to soften. And the thing is, as we go, and if we potentially get into a depression rather than a recession, then you're going to see a lot of prices coming down, quite a bit. It's going to actually choke out the inflation, some of the price inflation that we're seeing as they're working through the port backlogs. The supply chains are getting back to a healthier state. You're going to see a lot of the price increases because of competition for products diminishing as well. Gen Xers are cutting discretionary spending amid high inflation while continuing to save for retirement, study shows. Well, it's really good for them, and it's so good to see them leading the way. Everyone should be doing this, especially right now. The best time to prepare for a depression or recession is before it happens. Although inflation showed signs of easing in the last reading, consumer price index was up 8.5% in July from a year earlier. But if you look over the last month over month, it's actually down. More members of Generation X have cut back on both discretionary spending and essentials. Now's the time to start saving for retirement, but cutting back on spending. Maybe I'm wrong, and then all you'll have is a bunch of extra saved up money and fewer liabilities. If that's the worst that happens, then I apologize now. But I think you should get prepared for everything that's to come. And there's still a lot of opportunities, especially in all this commotion and chaos. There's going to be tremendous opportunities, and they're all starting to show up now. That's why we're finding some of these cybersecurity companies that are really tiny. I'm going to talk to you about just later in this video. And there's a lot of great small companies that are going to grow tremendously going forward, even as the economy continues to soften and weaken. And in some cases, these companies will do well because the economy is softening and weakening. Now I wanted to show you this one. Turkey shocks. Now I really want to show you this one. Turkey shocks markets with rate cut despite inflation near 80%. They've got an 80% inflation rate. Is that hyperinflation? No, it would have to be 50% per month. So it's not even hyperinflation yet, but it's tremendously unmanageable. It's an insane amount of inflation. And what Turkey did, instead of raising rates, they've been at 14% for the last 6 months. They actually cut rates. And that surprised the markets and it surprised everybody. But the point is, the underlying economy of Turkey is unhealthy. And that's what's allowing this inflation to grow like that. If you go into the doctor and you got something growing out of your arm, the bigger it is, the more serious it probably is. So they're paying 80% in inflation. That means that prices are going to be doubling about every year. Loaf of bread will cost twice as much a year later. But the reason I called out this article, why I want to talk to you about it, because this allows you to watch what happens in Turkey. You keep an eye on them. Just sort of, if you see a headline about Turkey, read it. And you'll see what will happen when you have way too much inflation in an economy that's not able to tread water very well. And you can watch what happens there, and then you'll know what might happen in America if things get out of hand. And like I say, you should watch Australia. You should watch China. Look at Japan. They have 3 lost decades. That's what we're in for in America if we don't do things more fiscally, responsibly, and intelligently. But here's a good one that we'll call it a victory lap. Home sales fell nearly 6% in July as housing market slides into a recession. When the market was going up strongly, I was telling you that house prices were going to come down. And it was a tough thing to do because everything said house prices were going to go higher. Limited inventory, not a lot of home building. I told you the inventory will take care of itself naturally, and I'll show you a headline about that just ahead here. But the house prices have started to come down. They'll come down a lot more. Like I told you, when they were going higher, everybody thought, I got to buy a house. It's going to just keep going up and up and up. They always do. They don't. And now they're starting to go back to what I call reality. Sales of previously owned homes fell nearly 6% in July compared with June, according to National Association of Realtors. Sales dropped to 20% from the same month a year ago. In terms of economic impact, we are surely in a housing recession because builders are not building, said Lawrence Yun, chief economist from the Realtors. But my next article feeds into that one. Home buyers are backing out of more deals as high mortgage rates persist and recession fears linger. It shouldn't be recession fears. It should be recession awareness. And this is just an example, another example of how the limited inventory will take care of itself. It will organically expand or increase. And it's all going to be based on the decisions of homeowners who are now doing more to get rid of their homes. A lot more are backing out of mortgages that they've committed to on paper. Home builder cancellation rates have more than doubled since April. According to John Burns Real Estate Consulting, nationwide, about 63,000 deals on existing homes fell through in July, or about 16% of homes that went under contract that month. That's a lot. That's according to Redfin, and it's a lot. Cancellations were 12.5% in July in 2021, so a year ago. So a year ago, 12.5%, now 16%. There's people who shop for a house, they talk to their spouse, they decide, let's go get a new home, and they go and they look at homes with the real estate agent, they get the contract, they sign the paperwork, they got a new house, now they just got to wait a few weeks to get everything sorted out and pay for it and live in it. And in that time, people say, I'm not going to go through with it, I'm not going to do it. The number of people doing that is increasing significantly. That will continue to increase even more, and then as interest rates rise further, then that will even make the problem more significant. So what happens when 63,000 people who have agreed and signed, agreed on a price, everything, signed for a home? What happens with 63,000 of them now who have purchased a home, taken it off the market, put that back on the market? Real estate agents are going to be very busy, but there's going to be a lot more inventory just from that. For example, inventory will be cured completely, not because of more home building, but because of things like people backing out of deals they already have and be less inclined to move when they were fanatically going after houses and waiving conditions and buying over asking price. Those days are gone now. The whole real estate market will recede. Prices will come down. Activity will come down. Fear of missing out will come down. Everything will be different, a little bit more and more each day, going forward for quarters and quarters, possibly years, potentially a decade, depending how things go. Cineworld shares plummet more than 60% on bankruptcy reports. There's a lot more bankruptcy reports you're starting to see, delinquencies, defaults. It's starting to really get going now. And this is the biggest movie theater in Europe or in the United Kingdom. And I always laugh because there's one by my house that kept going out of business, changing owners, changing the name. They changed the sign. They're moving things around the snack bar. And then they say, okay, now we'll make money. You won't. The problem is that it's a destination site. Certain sites like indoor skydiving, it's a destination site. You drive to it. You don't walk by and see it, and that's why you indoor skydive. You drove there because you wanted to do it. Movie theater is the same thing. It's a destination site. So people are making the decision back at home, talking to their spouse saying, oh, you want to go to a movie? Yeah, let's go jump in the car. We'll go pay $50 to watch a movie and have some popcorn. They have to decide to do that. That is gone now. That is not going to happen as much. People don't decide to go to the movies. It actually is kind of like the phone book or the phone booth. You don't have to go out for that experience. You can see the movie yourself at home for a lot less money, a lot less hassle. But it is a great experience going to the movies. But there will always be less and less people doing that going forward. This is a horrible business to be in. And it doesn't matter how you organize the snacks in the snack bar. Shares of British cinema chain Cineworld Group plunged Friday on reports that it is preparing to file for bankruptcy after failing to entice viewers back to movie theaters. Whether or not they get enticed back to movie theaters has nothing to do with the movie theater itself. This is what they're missing, their understanding. The stock was down around 63% in mid-afternoon trade in London. The company reportedly expected to file Chapter 11 petition in the United States and is considering filing an insolvency proceeding in the UK. And as promised, here's a special cybersecurity industry report that Stephanie put together. And I highlighted a bunch of parts of it that I wanted to read to you, because this is an example of what we do at the Peter Leeds newsletter. And even if you don't get into the newsletter that we have, you are going to want to know about this if you're looking for investments to get into. Global cybersecurity spending is set to expand 11 to 13% in 2022 and 2023. Already in 2021, a year in which several high-profile ransomware cases sent the business world spinning, cybersecurity spend soared 13% to $172 billion. Fortune Business Insights expects the industry to be worth $376 billion by 2029 for an eye-popping compound annual growth rate of 13%. This will be a big industry, but I got to get to you. There's risk here, so let me just get to this point so you see what the risk is, okay? In 2020, for instance, cyber extortionists made away with $422 million in cryptocurrency payments. That was up approximately 345% from 2019. With the U.S. Congress recently passing legislation for infrastructure projects, including cybersecurity infrastructure for federal and state governments, public spending on the industry will only accelerate further over the next 5 years. It goes on to talk about how we being Stephanie did all the heavy lifting for this. This is one of her specialties, technology, cybersecurity. This stuff is where all of the industry growth is going to be happening, these kinds of companies. But here's the part I wanted to get to because there is risk here. What happens is people say, okay, and they go and buy the first cybersecurity company they find. But what happens in every industry, always and always, where it goes on to talk about how Microsoft, Dell, and Google are all leaping into the space. So what happens is if you get the wrong company, a lot of them go out of business. But if you get the right company, a small company, it can survive on its own 2 feet and maybe become huge. Or what happens a lot of the time, especially in this phase in the industry, there's consolidation where Google, Microsoft might pick up a lot of these smaller companies. And when a company gets bought out, typically the share price gets a premium of at least 40%. The buying company needs to pay the premium to entice all the shareholders to say, yes, I want to sell my shares for this buyout offer. So if you own a company, a small company that's starting to grow, you don't want it to get bought out. You might make 40%. But if they don't get bought out, maybe you make hundreds, thousands of percent. But if they get bought out, that's okay too, because one of the comments I got once that I really liked was that you never go broke taking a profit. Microsoft, Dell, and Google are following the money, making inroads into the space via investments and acquisitions of smaller firms. Make no mistake, consolidation is coming for the cybersecurity industry, if it isn't already here. But here's the value in the Peter Leeds newsletter. You see how well it's written, how well it's researched. How you do anything is how you do everything. And I couldn't be happier with Stephanie. Stephanie, don't ask me for a raise. Poor Stephanie is the only person who actually has to watch all my videos. Tammy will watch them. Nobody else watches them. But Stephanie has to for work. That's going to be horrible. We strongly believe you don't have to break the bank investing in an expensive stock like Microsoft or Google to gain some exposure to this fast-growing industry. Small but high-quality cybersecurity firms are still waiting out there to be discovered. Here are the 3 that we find particularly intriguing. And it goes from, I think, $12 or something, one of the ones that she put out there and talked about. And another one's 30 cents. So you got the whole range of risk and possible reward and phase of the life cycle of a company. You can look at all the different picks that we make and choose which one speaks to you, if any. So remember, the gold coin contest prizes are going to be given away or announced in the next video, including a bunch of the photos that didn't make it to the finals I want to say something about. And you're also going to see the photo I would have entered if I had been allowed to enter a photo to the gold coin contest. Plus, subscribe to the channel. If you watch to this point and you still haven't subscribed, you have to ask yourself, why not? It would really help us. It really encourages us. And until we see you in the very next video, you guys are awesome. We love you very much, and we'll see you soon.